Well, listen, thanks everybody for coming today. My name is Mark, and I'm from Right Line. Whoops. Thank everybody for coming today. My name is Mark, and I'm from Right Line Trading, and I just want to give you a little bit of information about myself. I'm a graduate of the University of Pennsylvania, a former professor at Jefferson University in Philadelphia. I'm involved in the financial markets for over 20 years. And I began trading the futures and forex markets about 10 years ago. Have been involved in the optimization of software systems for almost a decade. Now, there are two basic underlying strategies that software developers take when developing a program to define market direction. And overall, I think they can be grouped into one. We have the price action people. And they believe that price action alone is enough information to trigger a buy-sell recommendation, i.e., that there's some specific indicator confluence that is going to provide you with enough information to pull the trigger. And then there are the people that use indicator analysis. Again, there's a unique composition of indicator signals, some composition of indicator signals, that gives you enough information to trigger a buy-sell recommendation. And then a further subdivision of the price action people and the indicator analysis people are those that believe that you must look at more than one time frame to confirm the validity of your trade entry in order to enhance the predictive value of your entry. Now, at Rightline, we reject both of these hypotheses. We do not feel that price action provides you with enough information, high predictive entries, in order to get you a signal with the predictive value that you need to become a profitable day trader. Nor does any confluence of indicator signals developed at this point or ever in the future that will also provide you with an entry with the predictive value, again, that you need to become a profitable day trader. Now, if either of these were true, the financial markets could easily be robot traded for millions of profit. If you could simply find some indicator confluence, whether it be an oscillator combined with a MACD, combined with some proprietary indicator that could give you a blue dot entry for long, a red dot entry for short, or some price action setup, some structural analysis projection that could provide you with a long entry and a short entry, then you and I would not be needed to trade the markets. The markets would be gone, and we would all be off somewhere as multimillionaires. The fact is that neither one of these are true, nor will they ever be true. That price action and indicator confluence signals have their place and have value, but in order to optimize the predictive value of your entries, you need to combine them. And that's what we've done at Right Line Trading. We look at market structure, which is in essence taken from the page of those that look at price action. We look at indicator analysis, taken from the page of those people that believe that some confluence of indicator signals is going to provide you with an entry of significantly high predictive value. And then we add fractal analysis. We have a platform that actually assimilates data now from 5 separate time frames to provide you with a trading entry that has really a fabulous predictive value. And we've done this in a simple trading platform that provides you with really remarkably accurate trading entries. Now, we also further extend our philosophy by telling you that I do not believe that any software can call a top or call a bottom. I don't believe that any software can call a reversal, nor is it possible to counter trend trade. We are trend traders only. We believe that institutional traders set the trend, and we want to be on board with them quick. It's our goal to define a trend early and get on board fast. So let's just take a look at a blank chart. Here's price action. Now this is crude oil, and this is an 8-range chart. Now we don't believe in any way, at least it's my philosophy, that you can look at this, read it, and determine where the low risk, high profit entries are to trade. So I want to go through this quickly because I really want to move to NinjaTrader and show you our trading. Now, first we define market structure a little bit. This is a 50-day, this is a 50-period moving average. It's right out of NinjaTrader. We've simply colored it so it's green when it's moving up and red when it's moving down. We believe bulls are in control when the price action's above. Bears are in control when price action's below. We only go long above the 50. We only go short below the 50. Then we have a proprietary 15-period moving average. It does not move like an exponential, or does it move like a simple period moving average. When it's yellow, it defines chop and we don't trade. When it's red, it defines a downtrend, and when it's green, it defines an uptrend. Then we add pivots, and we don't trade into major unbroken swing pivots. And our pivot indicator, I think, is one of the most unique and most powerful. It is only broken when 2/3 of the candle body, when 2/3 of a candle body close above it or below it. That breaks a pivot. Otherwise, this pivot is intact. We don't trade into major pivots. We don't trade into major trend lines. And we really only have the major pivots, our 50, and what we call our modified 15. Then we further define what we need in order to enhance the predictive value of our trade from a structural standpoint. And what we do is we have an indicator that tells you the difference between the opening of the candle and the actual modified 15. Here it's 7 ticks away. Now we want to take an entry off of a candle that is 4 ticks or less off the modified 15. I mean, we're providing what we provide is a risk analysis of every single trading entry in very clear-cut trading rules, so that you can make a risk assessment of an entry and determine if the risk is low enough such that the predictive value of the entry is going to be close to 90%. Then we have our 3-line indicator. The first line of this indicator looks at order flow. The second line looks at stochastic direction. The third line looks at momentum direction. Now, when it's down in all time frames, whether it's order flow, stochastic, or momentum, it's red. When it's green on all time frames, if it's green, it's up on all time frames. And if it's blue, it's up long term and short down term. If it's orange, it's down long term and up short term. And this may seem like a lot of information to put in your head, but you'll see the way we project it onto the price bars makes all of it really rather simple. Now, I want to go through some of the simplistic setups real quick. You can see, let me move right to this slide. Actually, here. You can see that when price action breaks the 50 to the upside, the candle is surrounded in blue. This blue rim tells you that order flow, stochastic, and momentum are with you to the upside on multiple time frames. And this is the way we want to trade. We want to trade with the trend. The 50's up, the modified 15 is up. We know that order flow, stochastic, and momentum are with us on multiple time frames, and we move to the upside. Same thing to the downside. The candle's surrounded in yellow. We know that order flow, stochastic, and momentum are with us to the downside. And the 50 is down, the modified 15 is down. We are trading with the trend, and we take the trade to the downside. Same trade again, but this is a break of the modified 15. The 50's down, the 15's down, candle is outlined in yellow. We know that order flow, stochastic, and momentum are with us to the downside. Bam, we take the trade to the downside. Same trade again to the upside. 50's up, 15 is up. We are trend traders. We're looking for the candle to be outlined in blue. Order flow, stochastic, and momentum are with us, and we take the trade to the upside. Now, we also, like I said, we trade market structure, which is very important to us. Now, this ABC formation is created by the software. I didn't put the A, I didn't put the B, I did not put the C in. The A begins to flash anytime two candles of the same color appear next to each other. That defines a trend. Now, by default, I simply set my B candle to be magenta. I want the B candle is the key candle in this formation, because in a downtrend it's the pull up bar, and in an uptrend it's the pullback bar. So when the B candle forms and finishes and prints, you get a beep. It's the only audible beep we have on the system. Then the C candle is going to start to flash on the system if this candle can engulf the B. And by engulfing, it means that the open of the candle is higher than the close of the previous, and the close of the candle is lower than the open of the previous on a downtrend. And you can see that this candle body completely overshadows the candle body of B. You're in one tick below the close of C. But remember, what we're doing is we're trading the trend. The 50 is down, the 15 is down, and what we're doing is we're trading a very conservative retracement into the trend. The market comes down, pulls back on the B, and then continues down on the C. Really what we in effect are, we're not only trend traders, but we are retracement traders. Same thing here again. Move comes down, the B pull up. Catch a lot. People are trying to. These are the unfortunate people whose money we're looking to take. These are the people in this B candle are all the buyers. They're trying to turn the market. They're trying to counter trend trade the market. They're trying to trade the market. What they're doing is they're predicting that this is a market bottom. But that market bottom is not going to happen, because what happens is we know from market structure and from our indicators that the 50 is down and our modified 15 is down, and that the trend is down. We're not going to join them in this B candle. We're going to wait for the C candle to engulf them. So this is our most powerful entry, the C candle. It's a retracement trade into a confirmed trend, and the C engulfs all of the people in B. So there's two forces that push this candle down. One is the addition of new sellers, and the other is all of the buyers in this caught in this failed counter trend move getting stopped out. It happens again. We have a downtrend, retracement on the B, the C continuation to the downside, and down we go. These are our momentum signals. The X tells us that momentum is aligning on multiple time frames. And you'll notice we always trade with order flow and momentum. We get a move up, a retracement back to the modified 15, and you'll see that the candle entry is surrounded in light blue. It's a green candle, it's surrounded by light blue. It's hard to see on this, I have to say, because the dark blue comes out easier, but we're trading with order flow and momentum. We're in one tick above the close of the candle, and up we go. So we're using fractal analysis, the assessment of multiple time frames. We are only trading with the trend, and we're trading retracements back to the modified 15 to continue the trade in the direction of the trend. Same thing, momentum entry. It looks like the C candle entry, but here we're entering on a momentum signal. Same pattern occurs over and over and over again. Move down. We don't take this move to the downside. Actually, we could have, but if we missed it, or we're in it, if we missed it, we take a move down. We take the retracement right into the modified 15. On the way down, you can see the candles outlined in red. We have a momentum signal. We're trading with order flow and momentum, and we are trend trading back into the downside. These are two more momentum signals. The second one is the retracement and the entry and up. Here we get this is a power entry. Again though, move down, retracement, down. Continue down, retracement into an intact trend, and down. And I know I'm going rather quickly, but I really want to get to Ninja. Here we have a move to the upside, a retracement back to the modified 15. This is a strategy entry. This simply defines, based on indicator logic, what we see in market structure. And that is that the uptrend is intact. We're taking a defined retracement into a 50 that's up and a 15 that is up. These are 2C candle entries. We get the move up, the retracement, the C candle and strategy entry combined. We're into the upside. We miss it, we get another retracement, strategy entry, continuation move to the upside. Again, another move to the downside. The break of the 15 and the 50, order flow, stochastic, and momentum are with us. And down we go. Now, another thing that we've done is we've looked at oscillator analysis, and what we've discovered is that the oscillator, trading with the oscillator, adds nothing to the predictive value of the entry. The key parameters are order flow and momentum. So what we've done is we've looked at ways to define when is a market overbought and oversold, and instead of using an oscillator, what we use is what's called our MA diff. And you're going to see from the platform that this is the difference in ticks between the modified 15 and the 50. When this is over 16, that defines an overbought market. When it's less than 16, it defines an oversold market. So you don't want to. This is where if you take a trade where the MA diff is greater than 16, is where you're going to start to see enhanced risk in your entries. Now, I don't really use the slope of the 15 or the slope of the 50, but when I made the announcement that I was going to take these two indicators off, I got a lot of protests because a lot of people in our trading room and a lot of people who use the software do use it. I do not use it, and so I'm not going to really talk about it. Now, we also look at volume. I mean, volume this is just a raw number of contracts traded. It just gives you a generalized feel for how volume is for the day, and you're gonna see that in the upper left-hand corner as well when we move over to the trading platform. Now we just added a new component to the trading platform, and this is the entire trading platform. First, when the background is highlighted in pink, it means that not only is order flow and momentum with you to the downside on the time frames that are calculated by the 3-line indicator, but they are also to the downside in multiple higher time frames. It provides you with a very strong bias to the downside. When it's green, it means that order flow and momentum are with you to the upside on multiple higher time frames. What I'm trying to do is give you as much muscle as I can, assess as many time frames as I can on one trading chart to really enhance the predictive value of an entry without having to make you look at multiple higher time frames when you trade. And when you look at the upper left-hand corner, and you're going to see this a lot better when I show you the trading platform. Again, you're going to see a small color. You can see it up here. This is assessing the direction of the modified 15 of our 15-day moving average. And that is one of the most powerful indicators we have. And again, it looks at higher time frames. So when this is red and you're taking a short trade, obviously your modified 15 must be red on your trading chart. We never trade against that modified 15. But if it's red in the upper corner, it gives your short entry even more enhanced predictive value. Now, before I go on to this, I want to go on to the trading platform, and then I'm going to come back to the slides. Let me drop my PowerPoint presentation for a minute. Now, can you see our trading platform okay? Hold on one sec, because I want to show you today's trades. Just give me 1 second. We'll rescale for you, and then I'm going to reshoot the chart. Okay. Now, this is today's trading chart. And let's take a look at the Russell. We're going to go over a whole day. Now, I know when a lot of people show you the software, the last thing they do is show you the trading day. And I really want to make this the cornerstone of our presentation, because this is where, oh, great, thank you, Kathy. And you're just really going to see how powerful the system is. Now, right here, it's 9:30, and we don't trade the Russell open. I mean, I don't like to trade a market open. It's very, very unpredictable. But you can see the Russell opened, and it fell. And since I don't trade it, I don't look at it. I wait for a couple of minutes, and the market bottomed and started to consolidate. And you can see that the modified 15 turned yellow, which means we do not trade. We have no trade. Now, our only possibility below the 50 is to go short. And you can see that we have a lot of swing pivots here that are going to prevent us from going short. So the key to this platform is patience, because you cannot trade with specificity and become a profitable day trader if you're not going to sit and wait for the market to come to you. If you are going to push a trade, ultimately you're going to get burnt, and we do not want to take a bad trade. Now, here was our first perfect trade, right here. And this is just what I'm telling you we're looking for. We get a break to the upside, we get a retracement, right back to the modified 15, and up we go. Now, I want to tell you, I didn't catch this trade in the room because it evolved too fast. And that's a 17-tick trade. Now, that is why we don't do retrospective analysis ever. The only kind of analysis we do is prospective, because that assesses a real-world setup and tells us whether we could actually take this trade. Now, you can see the bias is green. You can see that the candle is outlined in light blue, which tells you that you're trading with order flow and momentum. And this platform is assessing 5 different time frames at the same time. At the time, in the upper left-hand corner, our bias indicator was green, telling us that the modified 15 that we see on our trading chart is also up on multiple other time frames. Now, there was a difficulty with taking this C. It's too far off the 15. And then this C was overextended. We trade with incredible specificity. If you missed this move, and I did miss it, the predictive risk of this trade was too high, and the risk on this entry was too high, simply because the MA diff, which is right now is 11, was simply too big. So then we just sit and wait more. And finally, we broke the 15, where the candles outlined in light blue, order flow order flow and momentum are with us. I took a little bit of liberty here because we're a little bit tight to the pivot, but the trade went 8 ticks. It then retraced, and here's the key trade. This is all live today in the live trading room. We enter 1 tick above or 1 tick below our entry candle. Now our entry candle right here is our entry candle. And what we're doing is we do the same thing every time. We look for the move through. We look for the retracement. We just about have 2/3 of the candle squeezed above the pivot. It's really 1 tick less, but this had so much. Again, remember, it's a risk assessment. I had my bias indicator green. I knew that the modified 15 on multiple time frames was up. My background is green. I know that order flow and momentum are with me to multiple time frames to the upside. The candle's outlined in light blue, which tells me that my 3-line indicator is telling me that order flow and momentum are with me. I was into the upside, and we were up for 28 ticks. So we have 2 trades already, 8 and 28. Now this is live in the trading room. I mean, there was a beautiful entry that I just let go because I could not get to it in time. Now I did not take this trade because the majority of the candle was below the major swing pivot. It worked. This again was my second miss, unfortunately, and I miss trades. I wish I could trade perfectly, but you can see the background is green. Up over here, the bias indicator was green, and we had a perfect retracement. Again, same pattern over and over and over again. Get the move up, and we always trend trade. We do not counter trend trade. We're not calling tops or bottoms. This is a trade right into the modified 15. You can see the candles outlined in light blue. It means you have order flow and momentum with you, and up you go. Now this is the we took 2 winners. This is the and I had 2 missed trades. Then we had a gorgeous trade to the downside, and again, this is exactly what we're looking for again. Let me take this off. Take this off. We look for a break to the downside. We look for, remember, we're retracement traders into the trend. We'll pull back. The 50 is actually acting as resistance to the upside. Our modified 15 is coming down like a freight train. So the 50 and the 15 are down. We were short 1 tick below the close of this entry candle here, and we had 25 ticks to the downside. So despite the fact that I missed 2 juicy entries, this is how we finished the day. I'm going to go over to crude oil real quickly. Let me just squeeze over here. I mean, we had a boring day in the room today, and we had 3 winners. We made $700 based on our ATM strategy. And I will show you today's trades. We had 3 winners. On the Russell, we were plus 25, plus 28, and plus 8. We had net ticks of 58. Our net equity was $700 based on 2 off at 5 ticks and 2 off at 10 ticks, and then we're out of the trade. Auto Trader took no trades. So we made $700 today, 3 winners and no losers. And we had no trades on crude. Crude was just a terrible, terrible market today. And then I'm going to show you another day on the Russell. And I can actually pick any day, but I'll just roll to Friday. And I've gone over this chart a lot with a lot of people in the room and a lot of our traders. James, it trades great on the ES, but I don't trade the ES because I feel that we develop a better equity curve trading these momentum markets, but you trade a 3 range on the ES. a 3-range ES, 3-range Treasury notes, 3-range bonds. It does great on a 5-range Forex, and all the big momentum markets like crude, gold, the Russell, the NASDAQ, the Dow, all trade best on a 5-range. Now, let's look for our first very, very conservative trade. Now, here was a trade in the room that I saw and I let go. Remember, trading the right edge of a chart is the most difficult thing that there is. And looking back and making an assessment of the trading day is the easiest thing there is. There's nothing tougher than being on the right edge of a chart. It's a 10-tick stop. So the market comes down and then gives us a retracement. This is what we're looking for. We've got a momentum signal. Our background is pink. Upper left is red. Do we take this entry to the short side? It works great. I didn't take it because I don't like to enter on a hammer. To me, a hammer doesn't show a whole lot of buying, a whole lot of selling conviction or buying conviction. So I didn't take it. I let it go. And the thing is, I would rather let a trade with a slightly less positive predictive value go than take a risky trade on that right edge and run the risk for a stop at. But what I did take was this trade to the upside. And this is what we're looking for again. It's a little more of a sophisticated. Here's the move up. Here's the retracement. Now, if you took this entry, you're fine. You wouldn't have gotten stopped out. I just waited until that 15 had pulled closer to the 50. Okay, I'm going to explain the ATM strategy, so that I don't lose anyone. But here was the move to the upside. Either one of these candles would have worked. You can see that the 15 is green, the 50 is green. The candle's outlined in either dark blue or light blue. You have order flow and momentum with you to the upside. And that is a 16-tick trade. Now, our ATM strategy, this is our ATM strategy. We trade, up till today, we traded 4 contracts. It's a very, very conservative strategy. We take 2 contracts off at 5 ticks, and we're out of them. We take 2 contracts off at 10 ticks, and the trade's closed. That's it. If the trade goes 50, we book it as a $300 win. If the trade goes 23, we book it as a $300 win. If the trade goes 11, we book it as a $300 win. It's a very, very conservative strategy. It's a 10-tick stop, and the trailing stop goes to break even at first target. So it's an ultra, ultra conservative strategy. So when we say we make $700, that's because we made 2 second targets and a first target. So we actually construct an equity curve for our trading room. And we don't do it by, if the trade goes 42, we take 42 ticks. We actually take contracts off. And actually, if the trade goes 42, it's worth no more than a trade that goes 11. It's a very, very, very conservative ATM strategy. Now, if you go along, here's your next entry. And this is an entry, I'm telling you, 99% of the people in the trading room took. It cleared all the pivots here and here. Background is light blue or green. Up here, this was green, our bias indicator, and we're trading the retracement. And this is a C candle entry. It's one of the most powerful we have. And up you go. And you'll capture this entire move. 1 tick above to the top here, 22 ticks. This did not come back 10 ever to take us out of the trade. Now, we never trade a yellow modified 15. We always wait for the 50 and the 15 to be the same color. If they are not the same color, don't even look at the trade. It's the only time we can possibly trade. And remember, we only trade retracements. We do not trade breakouts. Now, some people do trade the breakouts. I do not. This is a breakout. I don't take these. But you can see this is a breakout trade. You have the 15 down, the 50 down. You've cleared the 50. The candle's outlined. Order flow, stochastic, momentum is yours to the downside. You could take this trade to the downside. I don't. What I do is I wait for the retracement. Here's your first retracement in the trend. It's right here. And there's your first entry to the downside. And this is a gigantic trade. It went all the way down to here before it stopped you out. 37 ticks. You could not get back in here because the MA diff was too high. The market was read as overbought. I'm sorry, here oversold. So this is a 37 tick conservative trend trade based on a retracement into an intact trend. 50 is down and 15 is down. As we move across. Now, here's where the system really saves you. You see the 15 is up, but the 50 is down. Now, they don't correlate. And since they don't correlate, we don't trade. Here's a C candle entry. Here's a retracement. Up you go. You get a retracement. But the 50's red. And therefore, our bias is for a short trade. So we never go long. So there's absolutely no way we can get burnt on a trade setup like this because the 50 and the 15 are moving in opposite directions. And they continue to move in opposite directions until the spread between the 50 and the 15 is so large that there's now no place to go. We can't take a trade to the upside anymore. The modified 15 turns yellow, which means we don't trade, and we just have to sit on our butts. The 15 is that's right. Now again, here to the downside, cannot take it. The 50 and the 15 are in opposite directions. No way to trade it. No way to trade any of this. Now we're late in the day and we don't have a signal, but there's your great entry. Just based on market structure. The move down. The retracement up. And the continuation to the downside. And this is done with a small MA diff, very, very tiny. Now, we should be long out of the market before this happens. And I'm going to show you the same thing again on crude. And I don't want to be redundant, but really what I want you to see, though, is that the same patterns occur over and over again ad infinitum. Now, on Friday, we also were 3 and 3. So far this month, and I'm going to show you our how we've traded this month. We have 10 trades. We have 9 wins and 1 loss. So we're trading at 90% so far this month. And this is in the trading room. And again, trying to look at 3 charts at the same time, sometimes I miss trades. But what I try to do is not take a bad trade. And day trading for a living is never about the number of good trades you take. It's about a number of bad trades. People always say, how many winners did you get? How many winners do you get? Well, you know what? It's never about the number of winners. It's only about the number of losers. Now, this may look like a trade that you saw before. But it's not. This is the first time we've looked at crude oil. It's the break, it's the retracement, and it's the move up. I mean, actually, maybe I did show you this. I can't remember. Let me, can't remember if I did look at the crude oil chart. Well, we'll just go through it. It doesn't make any difference. If there are any markets, are there any markets that anybody would like to see? I'll put up any market that you like. Any markets? Any takers? Okay. Toby will put up the NQ. Toby came in first. He got the NQ. We're going to put up the NQ. Now, I haven't seen the NQ. I don't trade it. I don't know what it did. We're just going to look at the open today. And we're going to take a look at the NQ. And we'll look at it we will look at it together. Now, I've yet to find a loss. We will find them. Let me just get this off. And when I do, I'll point it out, believe me. Now, we don't trade the NQ open. You can see it's moving around. Now, remember, we want the 50 and the 15 to have the same color. We cannot trade until they come into sync. And they're not in sync here. They're yellow, green, yellow, green. The 50 is red. We cannot take any of these trades. Then when the 50 turns green, the modified 15 is yellow. Finally, we get a little bit of red, but we've got no trade here. We're caught between two trend lines. We don't trade into unbroken trend lines. Here is where we finally get our first trade on the NASDAQ. And there's no ambiguity here. You cannot trade here. The 50 and the 15 do not correspond. Now, if you want to trade the first 4 minutes of the open, you still don't have any structural trade entry. There's no retracement. As we move in, there's just no place here to trade. The 50 and the 50 are moving in separate directions. And what the 50 represents is momentum. What the modified 15 represents is momentum. When these two forces are in opposite directions or polar directions, you don't want to trade a long-term momentum that's down and a short-term momentum that's up. You want to wait until momentum is identical and matched. And that happens here. And what you want to do is you want to wait for the conservative, ultra-conservative, move up, retracement into an intact trend, and up you go. Right there is the momentum entry. It shows that momentum's aligned on multiple time frames. You've got the 50 and the 15. Background is green, which shows that our order flow and momentum are aligned on even higher time frames. I can't look back in retrospect, but I'm sure that our bias indicator, which shows our modified 15 and multiple higher time frames, is also aligned. And this is a perfect entry. And this is going to give you 4 3/4 points. Now you have your second entry right here. I don't know if you get stopped out here. I can't tell if this comes back 10 ticks or not. The high of this move is 66. No, I'm sorry. It's 68.0. The low of this move is 64.5. So it is. So you're in again. One tick above, and you have 5 points. Now up here, you have a third retracement, but here's where you're overbought. You're not going to take this trade to the upside. So then you have to sit. Now you can't take any of these trades. You're in an overbought market. The MA diff here is way too big, and you're not going to trade long on an overbought market. You need a retracement. Can't take this trade. It works, but it's into an unbroken pivot. The unbroken pivot, it crashes right through it. Doesn't matter. I'm not going to tout it as a winning trade because basically it ain't going to work. Now, here's a potential short trade right here. Now, with a little bit of additional screen time, remember I showed you the indicator that shows you the distance between the 50 and the 15? When the distance between the 50 and the 15 is over 4 ticks, we don't trade. And this is way off the 15. We call these hanging Cs, and we never take them. So this is not an entry here or here. And these are very, very dangerous entries. We wait for the trade to pull deep into the modified 15. And here's the trade. This is the one that we like. You can take this one. Either one of them would have worked. You get the move down. You get the pullback right into the 15. If you took that one, it would have worked. If you waited and were a little more conservative and took the candle body pull up into the 15, either one of these would have been successful. This one would have taken you for 2.5 points. This one would have taken you for less, for 1.75 points. Let's keep going. Now here we're at the end of the day. And even at the end of the day, here's a great signal. Right here. Pulled right back into the modified 15 on a perfect retracement. The market moves up, retraces right into the 15, does not stop you out, one tick below, and it takes you all the way up to here. That's an 8.5 point move that occurred at 14:18:18. Now I'm just going through this. Okay, now I'm just going through this just as you see it. So, and let me tell you, these patterns recur on every market over and over and over again. If you take conservative retracements into an intact trend, the system is going to work for you. If you try to breakout trade, if you try to call tops, if you try to call bottoms, if you try to call reversals, you're really, really going to get caught. The only way to trade is with the trend, and the safest way to trade with the trend is with a conservative retracement directly into the modified 15. Now I'm going to go back to our slides. And hold on a minute, I'm going to rescale again. And basically, here's our money management. 10-tick initial stop on 5 contracts. We take 60% off first target, 5 ticks, 3 contracts. You have $150 in the bag. The stop moves to -5. The very worst that can happen is the trade comes directly back against us, and we wind up with a very small profit of 50 bucks. It pays for our contracts. Hopefully we'll get to our second target of 10 ticks, take a contract off. Now we have $200 in the bag. We have a $250 trade, and we're in on our trailer at no risk. We're up 10. Our stop is at break even. And if we can get this trade to go 20 or 30 ticks, and we get a lot of trades that go that far, we can wind up with a $400 or $500 trade. We wound up with one single $400 or $500 trade. Now here's what we've done in the live trading room. This is not retrospective chart analysis. This is not maybe, and this is with my trading flaws. Missing some trades so far in April, and actually this should be May. I'm sorry. I'm not going to change it, but this is May. We have 10 trades in 3 trading sessions. Cumulative winners 9. We only have 1 loser. We have 115 ticks, and on 3 trading sessions, we have a cumulative profit of $1,500. And we're heading towards a month at least of $10,000 if we continue on this slope. Now, the thing about our live trading room is we don't go on ifs, ands, or buts. We don't hide our trades. We scale every single trade, and we're incredibly transparent. In fact, some people have criticized me for being so transparent. And this isn't an educational room where we show you where maybe you should have gone long, maybe where you should have gone short, and basically we're kind of quarterbacking you. I give you the entries, and we give you the ATM strategy, and we show you exactly what your cumulative profit would have been on that trade. Now here, month-to-month profit in the live trading room, starting January 1st, trading 4 contracts, you'd be up just under $25,000. That's starting with a $4,000 account. And those numbers aren't fudged, tweaked, or anything. Those are our actual trades in the room. And here's our percentage. We're just under 600%. Remember, I'm only using a portfolio size of 4,000 because we're trading 4 contracts, and that would give you maximum equity draw, maximum margin draw of $4,000, and that's a percent increase of just under 600%. And again, those are real figures. Now, this is the profit on our auto trader. This is a whole separate piece of software. I'm sorry, you know what? Just today, we changed our ATM to 5 contracts. Up till today, all the way through January, we've been trading 4. So I want to make that clear. All these equity curves are generated on 4, 2 off at 5, 2 off at 10. Here's our profit on the auto trader since January. You can see it's hit a rough patch, but it's still slowly gaining profit. This is on 3 contracts, $10,000. Percent increase, about 600%, because the equity draw, this portfolio size should actually be 3,000, not 4,000. It's just a small mistake. Now, you need outstanding software to do 90% of the heavy lifting. But again, we're fighting the smartest, richest people in the world who use very, very sophisticated trading systems. They move the market. I used to watch the tape for months and months. I used to watch trades cross, and lots of, on crude oil, I'd watch in lots of 10 or greater. On the Russell, I'd watch in lots of 5 or greater. And when these machine-generated trades hit, you just see 10, 10, 25, 25, 25, 25, cross like machine guns. And these are the institutional traders smashing these trades through, and they are determining the trend. And we want to get on the trend. Now, education is really, really important. With the software, you get 2 hours of training with me personally, and you get a lot of educational videos that we make available to you. So I do a lot of personal mentorship time with you. Now, in addition, we never ask you to pay for boot camps and all of that. I call it nonsense. I'm sorry. If you can't buy our system and trade it profitably with what we provide you, we're not going to. I don't even know what a boot camp is. I mean, to me, that's something you do in the Army, where you run 2,000 laps. We don't charge for boot camps. We don't charge for extra seminars or lectures. And we just had an extra seminar last week and the week before, where we took everyone in the trading room, and I went over all the trade setups, critiqued everybody's trades. Everybody sends me trades every day via JPEG. I look at them, assess them, comment on them, and email them back. The other biggest thing is, when we do an upgrade, we give you that upgrade for free. We don't have a gold package, a silver package, and a platinum package. And for those of you with the most money in your accounts, you get the platinum package, and therefore you get the most powerful indicators. And those of you with less money, you got to buy the tin package, and that's only going to give you this amount of trades. We give you the best software that we can, and we never charge you for an upgrade. And these are all of yours for becoming part of our family. Now, the prices, the software is $34.99, and that comes with 2 hours of personal mentorship. But we want to make it available cheaper if you like it. Now, the software to lease is $3.99 a month. The live trading room is $2.49 a month, and the auto trader is $3.49 a month. We'll give you, Leo will put the email address in. Now, as a special webinar, what we're doing is we're offering a lease to buy option. So for $3.99 a month, you can lease the software package for 2 months. And then after 2 months, you have the option to convert the lease to a buy and apply what you have already paid to the purchase price. So it's almost like we're financing it for you, and you get a significant amount of time to test drive it before making the decision to plunk down $34.99, which is expensive for software. So the lease offer also comes with 2 free months in the live trading room, so you can come into the trading room as well. Now, the only other thing I want to add is that Leo's going to send you a link to sign up for a free trial to our trading room. Would you put a link in there, Leo? Now, if you want a free trial, we will give you not only a week in the room, but we will give you a 1-week free test ride of our software. We'll actually give you the software package. You can put it on your computer. We'll help format it for you if you want it. And you can basically trade with us live in the trading room with the software on your computer for 1 week. And that's without a credit card, without asking for anything. So, are there any questions? There's our link to sign up for that. And we're also going to send you a tweak email a little bit later. Are there any questions that anybody has about our system, about the special offer, about anything? Sure, you can. You can use PayPal, yes. If you go to our buy page, you can use a credit card, or you can use PayPal. Any questions for me at all? Thank you, Toby. I mean, the thing is, I want to make as much information available to you as possible because, I mean, listen, I've listened to 1 million lectures on Online Trader Central. I've learned a lot from the lectures here. But I want to be as transparent about our trading program as possible. I believe the more information you have about it, the more you get exposed to it, the more you'll come into our live trading room, the more you put the software on your computer. You're going to become addicted to it because it's going to work for you. And because you're going to, maybe for the first time in your career, you're going to see that becoming a professional day trader is within your reach. Now, you wouldn't be in this room. Well, actually, I'm in this room a lot, and basically, I do trade profitably. But most of you are looking, and I'm telling you, this can make you a very, very successful, profitable day trader because we look for such conservative setups. The key to day trading successfully is discipline and patience. I have to underscore the word patience because sometimes it is a very boring profession. We sit and we watch and we wait for that 15 and 50 to turn in the same direction. Sometimes it'll take an hour and we don't get a trade, an hour and a half and we don't get a trade, and then bang, 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 we get 3 trades in a row and 3 winners. So let me just look at the questions. No, it's 4,000 minimum. I mean, at least I'm with AMP Futures. They charge me $1,000 a margin per contract on crude and $1,000 per margin on gold. Okay, the question is, how do you trade 4 contracts with at $1,000 per contract? Well, listen, I'm just taking a $4,000. You would probably need a $5,000 in real life, Denise. That's correct. It does not. The Auto Trader doesn't include the live room RCR, but I mean, we will help you out. We always enter limit orders. We never take a market order. We enter buy stop limit and sell stop limit orders. We want our orders waiting on the long side at the close of our long candle as the C candle matures or the entry matures. We never let the market tell us the entry. We want to tell the market what the entry is. Now, on a buy stop limit, occasionally it'll jump over. Let it jump. If you don't get the trade, forget it. You'll come back and you'll get 5 other good ones. Listen, like I said, John, if you got a buy stop limit or a sell stop limit, once in a blue moon it'll jump over your entry. Let it go. Listen, there's always, if the market is fast enough, there's always occasional slippage. There's no way we can get away with that. No, the tape is somewhat similar. Order flow looks at executed buys and executed sells at each tick level. Okay, Rick asks, when you say you measure order flow, is that like reading the tape? It is a little bit similar because the tape shows you executed buys and executed sells, and that is exactly what order flow does. It looks at executed buys and executed sells. For each signal, correct. For each signal, we're looking to enter 1 tick above or 1 tick below. How do you handle... Denise, I'm sorry, you say how do you handle hits, is it? I'm sorry. I just... all right, well, listen, I'm sorry, I got to go. Listen, listen, high-frequency trades, Denise, occasionally you're going to get caught with slippage. Occasionally you're going to get, listen, this is why it's so important to trade with such discipline and patience. The market is always stacked against us. We are the small guy. But I'm telling you, if you stay with the conservative trend trades, you're going to make money. Now, I want Leo to put our email address in there, our web address, and also our phone number. If you have any additional questions, I'll be here for a while. You're more than welcome to give us a call. No. Remember, Chris, up till now, we never took advantage of the runner. We're out of the trade already at 11 ticks. The only reason I put the 37 in there is for us to get an idea of how far the trade went for the potential to tweak our ATM strategy in the future. I never assumed that if a trade went 37, anybody get out at 37. Now that we're taking a runner, that would be a 27-tick winner on the runner. $270 on the runner. All right, I got to go. Because we're at 6:33, please feel free to call us, email us, come into the room, get a copy of our software, download it. We'll help you download it to your computer. Take a look, and I think you will be very, very pleased with it. So thank you everybody for coming. It's late in the evening, and I really, really appreciate your time. I hope to see all you guys, all you ladies and gentlemen in the room tomorrow. We are Right Line Trading on Skype. You can call us anytime, and we have our 800 number. Thank you very, very, very much. Kathy, Kevin, thank you.
Hi everyone, we want to thank you for coming to Online Trader Central tonight. Kind thanks go to Mark Sachs,